Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair. And this week we're joined by James Cochrane from Stace Hammond to talk about crypto coins and the future of crypto.
James, great to have you back. Partner at Stace Hammond, our crypto lawyer. If you have not seen the previous episodes we have done, please stop, jump back so you can see the full experience. Today is all about different types of coins, which, James, we could probably be here for a few hours, right?
Well, there's 13,000 of them, so how long have you got?
Yeah.
I don't know about all of them.
Yeah, okay. Yeah. Maybe not 13,000 hours.
Yeah.
But let's start, this is going to be really interesting, and I think it's very similar in a lot of ways to shares going, all right, I want to get started in cryptocurrency. What do I do? We find the best way for people to learn about different types of investing and different approaches this is not advice, obviously, but maybe if you could talk us through your own way of how you invest into crypto and your own allocation.
Yeah, sure. So I guess I start from the point mentioned in the previous episodes. I view this as everything can go to zero, right? I look at it, is this money that I have allocated, is this something that I must use? And the answer to that is no, right? I am fortunate enough to have enough income that I don't need to rely on selling my crypto in order to, meet bills.
Just on that point before I let you jump in, James, one thing we see as well, and Mike teaches a lot as a mortgage broker, is people saving their deposits for their homes in crypto coins, and then coming time to settle, Mike, can get a little bit complicated, kind of.
And getting a loan from mum and dad to plug the gap?
Yeah.
Yeah, sure.
Yeah, so I think that's a really good point in terms of, firstly...
They're basically doing an arbitrage, borrowing their money cheaply from the bank in the hope of a higher return on the crypto.
Yes.
100%.
Yeah. Not so cheap anymore.
Yeah, there is a guy who's quite... many people who follow crypto on YouTube. There's a guy named Michael Saylor who is a massive advocate for Bitcoin. He got reasonably famous last year because he took his company called MicroStrategy and basically took the free cash that the company had and converted it to Bitcoin, and then he raised more capital to buy more Bitcoin. So I guess it's a sort of similar trade. I definitely wouldn't recommend that, but that's something that people do, and you're right, that could create some real mess at the time that comes to settle, because you're going to have to convert your crypto back into NZD. There's going to be fees on the way out. The fees on the way out are greater than the fees on the way in, and then you probably have a tax liability unless you've bought at the peak and now you're selling at the bottom.
Yeah, similar to like being invested in like a growth Kiwi saver until the day you want to take the money out for the deposit, right?
Yeah.
So anyway, sorry to interrupt. Back to your story in terms of how you allocate.
Yeah, I guess I view it through this lens, right? Am I prepared to take more risk at this particular time in my life? My strategy may not work for lots of other people because they're not in the same position as me. If you're closer to retirement, you're probably going to want to adopt a conservative fund with your KiwiSaver, right, as opposed to a growth fund. It's a bit the same. If you're thinking that you're going to need to use your crypto sooner rather than later, then you probably want to be reasonably conservative with the crypto that you're buying, because when I say conservative, highly risky, but still something like Bitcoin, which is a bigger market cap. So the bigger the market cap, the older the product, the sort of less volatile, less risky is how I view it.
Yeah,
right?
it's still a risky asset class, but you're moving to the lower end of the risk spectrum inside that class.
Yeah, I guess I approach it like, if you look at traditional markets, you have a risk spectrum, right? Over on the left you have US Treasuries and cash, which are fixed incomes, quite sort of low risk.
Mm-hmm.
then you have equities and tech stocks, emerging markets, and you start to get more risky out this way. It's the same with crypto. The bigger the market cap, yes and no. Generally, the bigger the market cap, the less risk. Lower the market cap, chances for bigger returns, sure, but also chances for zero a lot higher.
Yeah.
You could take a strategy. There's certain types of crypto called stablecoins, where they are essentially pegged to a fiat currency.
Yeah.
So there's something called Tether, USDC, which basically hold their value in US dollar terms, right? So they don't fluctuate. But the other ones that are sort of like their own currency, then they are quite volatile.
Yeah. I mean, so James, we've nearly been talking for probably about 2 hours all up about cryptocurrency. I think it's probably time we have our first, disagreement or quarrel.
Sure.
Is the idea that a market cap can be bigger and then potentially lead to less volatility or be less stable. That gives me the sort of vibe of like almost too big to fail. So then I go, well, if you are invested in blue chip stocks, and because I keep bringing this back to what I know, blue chip stocks, you wouldn't want to be invested all in like one blue chip stock, right? You'd want to be diversified across, ideally, more than 10, but say like 10 blue chip stocks, and then that gives you some more diversification. That gives you a better journey. With cryptocurrency, though, how many coins are there? Because I know Bitcoin, Ethereum, and Doge for laughs. Outside of that, I'm probably struggling a little bit. How many coins have really significant market caps so you can get enough diversification in the bigger coins to reduce your risk?
Yeah, so I agree with you. It's good to spread your risk, right? I have a bigger allocation to Bitcoin because I really believe in the tech. I believe in the community. I believe in the the asset managers allocating and the businesses are buying and being built and whatnot. Then a bit more Ethereum, but then prepared to take a bit more risk. So generally like to keep. I'm quite conservative. This probably sounds like I'm just a raging bull way out on the risk curve, but my whole job is understanding risk for clients.
Yep.
What's the risk of how are you going to go in this proceeding? What's your likelihood of winning? What are the outcomes? Anyway. So I tend to prefer to keep my investments in the top 10 market cap, but I am prepared to look a bit lower in the market in the market cap stakes if I see projects where they are, they might have an exciting use case, or they're building a lot of dApps, decentralized apps. The ecosystem for that particular token is growing, but I view it like this is early stage tech. Okay, could it go wild, right? But my allocation is a lot lower.
Yeah.
So firstly, I love the term dApps. Like, that's great. But in terms of the percentage, once again, not financial advice. For you, your divvy between those, Bitcoin, Ethereum, are there any other really big players that kind of sit in that sort of sphere? Or?
Yeah, I mean, there's been a real boom in the last year on what are called layer ones. So, again, it gets quite technical, but Bitcoin is a layer one which has dApps built on top, right? So Ethereum is the base layer, the layer one for the Ethereum network, and there's lots of Ethereum dApps built on top. There are a bunch of other layer ones, like Solana has been one of the big ones.
Yeah.
That was up something like 14,000% in a year. It's crashed quite a lot.
We should have gone on to Solana.
Not financial advice.
Yeah,
Do not expect 14,000% return on Solana.
Well, generally, if if something's up 14,000%, you're probably, and people are talking about it at barbecues, and there's probably going to be a correction.
Yeah.
And the corrections have been, when the market started to turn bearish, because crypto's a very liquid market, and if people need their cash to meet other obligations, or they just get scared, they can pull it, and that creates a run, right? So that can lead to a sell-off. So Bitcoin got, I think its correction was 50%. Some of a lot of the what are called altcoins aren't. Some people call them shitcoins, but like the sell-offs in those and the corrections have been massive.
Yeah.
But if you zoom out, something which might have dropped 80% had been up 14,000% over 24 months. It's like it must correct. It must come back to the mean. So, so the projects like Solana, I quite like Solana just because there's a lot of stuff being built on it. It's has a slightly different approach to Ethereum, where it's supposedly faster. The transaction fees at the moment are lower, meaning that you can mint your NFTs for less because you're not having to pay big transaction fees. So I was reasonably bullish on Solana, Avalanche, Polkadot. There's tons of them. Chainlink is another one. Chainlink is
And these are all layer ones, are they?
Generally, yeah.
Yeah. I just want to jump in and come back to your question about too big to fail, and not having. I guess what you're asking is there enough coins at that layer one space to spread the risk? You're not in sort of two coins expecting those to be the stable ones. I get the question, but if you think about like the S&P 500, 500 tech stocks, but the majority of the gains are made up from 11 stocks, right? So even though there is a large proportion of players in the market, you're really only investing in a handful of stocks that are really the too big to fail. So I guess what I'm trying to say is like, is the fact that there isn't the number of coins being too big to fail, but the fact that those coins make up a large percentage of the market, does it sort of net your question out? Whereas I'm not spreading across 500 stocks that are the large players in the market. I'm spreading across 4 or 5 or a handful, but the percentage of the market that they make up means that I do have that sort of that less risk in those.
Yeah, I think you have to think about how much you've got invested into those tech stocks to start with in terms, and this is probably a whole nother thing.
But we always quote the S&P 500 as being one of the the lower risk sort of passive investments.
To an extent.
Yeah.
But also if you're, and I mean this would be interesting as one as well with the way like an index fund works is if a cap is dropping in value, something else is coming in and then purchasing percentages of the funds, right? So that the weighting of the 500 changes as the market. And I think this is probably the big gap in, I know this thing's starting to come up, but like an index fund for crypto, right? Do those, I know they're coming around, but how big are they in New Zealand? How, like, I know how to use Easy Crypto and invest. Yep. Like my whole thing is very straightforward. I invest $100 a fortnight into Bitcoin and $100 into Ethereum, and I do it purely to learn because I get so many clients that ask me. If I wanted to invest into,
it's quite a good strategy.
Well, thank you.
Dollar cost averaging.
If I invested into, like, how can I invest into like an index fund? Because index funds are great for people who, I get on people all the time about sharesies. Don't pick direct companies if you have no idea what you're doing. 3.5% of day traders make money picking direct shares. Yeah. Do those things exist?
They do. And in New Zealand has recently had a ETF launched, I think by the team behind Easy Crypto or related to them, called Vault.
Right.
There are other. I think that's retail. I'm not sure. I don't use it because I am comfortable understanding how it works, right? I understand the wallets and things like that, and I'd prefer not to pay someone fees. But there's another one. The name escapes me at the moment, but as soon as you see platforms like Cheques making it available, then that would probably encourage New Zealanders to adopt more. Yep. I mean, there are ETFs in Europe and Canada, as far as I'm aware. Last year there was a bit of a peak in the market when the Bitcoin futures ETF was announced.
James cries in risk.
Yeah. So, did you allocate? ProShares. So yeah, I mean that's a futures ETF. It's buying futures contracts. It's not actually buying the underlying Bitcoin. Sorry,
Jeez.
Weeds. I'll get out of the weeds.
No. The thought of buying a Bitcoin futures contract scares the crap out of me.
You're just like the risk compounding and the risk.
That's what's going through the roof.
Yeah. So at the moment, there's not a lot of options for Kiwis, but I think it'll be coming
as the market continues to mature, right?
And there's been, I guess, a reluctance from the banks, or the banks have been nervous, I guess, about use of funds for buying crypto. But I guess as they get more comfortable overseas, then they're eventually going to have like the ability for their customers to have, got my ANZ savings account and my ANZ check account, and there's your Bitcoin account, all via your ANZ app, right? That's what I see. Not necessarily ANZ. They might be slow, but
it'll be the Lighthouse app.
Lighthouse app. I like it. Bullish.
And then just quickly to cover off, what are some of the more speculative or lower market cap coins that you've been looking at recently?
Not financial advice. I guess.
Let's make that really clear. This isn't financial advice.
And also why they're interesting as well.
Because we in a previous episode you talked about measuring the strength of the network as one of the reasons why you would look at a coin. And I'm really interested in how you measure the strength of that network outside of just the community.
Yeah. So.
There's a couple of questions.
You don't want to cover NFTs, but when I'm looking at speculative investments, buying JPEGs of cows that might be an avatar in a game that's similar to the blockchain equivalent of Farmville, that's pretty speculative.
I'll put the house on it.
So, when I guess what I'm seeing is I'm seeing a trend where these ideas, businesses are being launched essentially via NFTs. It's for me, it's like a repeat of the ICO boom. Where capital is being raised via NFTs. The community, when you look at it, is do I like the use case? What's unique about it? What's the community? What's the Discord like? Is it very busy? Is the Twitter being followed? Has it got a lot of activity? Who is behind it? Try and do some due diligence, not just go, oh, this one's new.
Looks pretty.
Yeah, that's a market where some of these things can go just absolutely wild. If you think about something like Bored Ape Yacht Club token or CryptoPunks, I've got a book and it was talking about CryptoPunks, and at the time of the book, I think it might have been 2020, CryptoPunks about $12 or something. And now some of them now worth millions of dollars. That sort of stuff, super low cap, right? And super speculative, but if you're going to mint one for, I don't know, 1 Solana or 0.1 ETH or something, a couple of $100, you do have the potential. That project's all of a sudden gone to 60 Solana or whatever, sort of 60x. So I guess that's how I look at it. Am I prepared to? I guess I view it a bit like sports betting. It's an educated gamble. Do I know the players in the team? How have they been going lately? Do I think they're going to win this game?
Yep.
Are they going to win, by X points or whatever, right? I sort of take this similar mindset. Do I like the project? How's it going to go? For one example, talking about the NFT portfolio, most of my NFTs are probably underwater at the moment, right? And some quite badly. So something that I might have paid, for example, 2 Solana to mint at the time when Solana was 350 Kiwi, $700, is now, rather than 2 Solana, 0.1 Solana, and Solana's now worth, $130.
Yeah.
Right? So quite underwater. One of them that's gone bananas, and I guess it's kind of like the VC analogy, is called Portals, and that is, the reason I like that is because it's a Solana Metaverse play.
Yep.
It is basically allows what they're building is like an office space where you can use your NFT as an avatar to go and create your office. Put some pinball machines in there. You could even host people to an online meeting, a bit like Zoom. You can display your NFTs on the walls of your sort of Metaverse play. They're building out a downtown train station where you can, I guess eventually put your VR headset on and go wandering around the Metaverse. And I quite like that because the team that was behind it is they won what's called the Solana Hackathon, and that's basically these really smart developers. This was their project. Solana community gets in behind it, gets investment from VC. They just recently announced another funding round. They're hiring developers. It's got an active Discord community, right? They're meeting their what they call roadmap targets, which is a bit like their white papers.
Yep.
And that's why I keep my money in it.
Yeah.
Whereas some of them, you have to be prepared. I originally came at this thing with, I'm just going to hodl. I don't want to sell anything.
Yeah.
I want to hand this stuff down to my kids. I don't need to sell it because potentially I can borrow against it in CFI or DeFi. Can you put my Bitcoin up as collateral or whatever? Borrow US dollars against it. Don't need to sell it. But some of this stuff, which is more speculative, if you can see the air coming out of the balloon, maybe it's actually better to run, right? To cash up and get out because someone is, the devs have lost interest or, they've just burnt the money or whatever and they're out.
Yeah, diamond hands never sell.
Yeah.
Let me ask you one more question before we wrap up, James. You hear a lot of things around the environmental effects of different coins. Bitcoin, I haven't looked into it, so I don't know the background behind it. Bitcoin's impact on the environment and some of these other coins' impact on the environment. What are your thoughts?
Yeah, so they use different coins use different ways of, securing the network. Bitcoin, the two most common are proof of work, which is what Bitcoin and currently Ethereum uses. But then other projects use like Cardano, Solana, well, not Solana, Cardano and ETH is moving to what's called proof of stake. With proof of work, the way that the mining process works is the miners are computers, right? They use computers, use the software on the computers to crunch a really difficult encryption mathematics problem. It's very difficult to solve, and that requires power, right? Essentially all the miners in the network, all the computers in the network are competing to solve this complex mathematics problem. as I understand it, it's equivalent to rolling a dice and hoping you get a die and you get the correct answer. When you get the correct answer, then you have the right to mine the block, and then you win the mining reward, which currently I think is 6.5 Bitcoin. So quite a lot of money. What's Bitcoin? 43K this morning or something. US
or something. Yep.
Yeah, so quite a lot of money. But that number crunching computer process, which is a real world, thing, sucks energy. So compare that to proof of stake, where essentially what they're doing is people are putting up their coins as security. They're giving their coins to the network in return for voting rights and possibly some yield and stuff to secure the network. So the idea is you're not going to be a bad actor because your own coins are at stake, right? Both models have their advantages and disadvantages. The proof of stake model arguably can have a tendency to centralize. It means the people with the biggest bags have the most control, which means that they could be what Elon Musk terms a throat to choke, right? So they can be coerced or influenced by government or that sort of thing. Whereas proof of work is it is decentralized because everyone's competing within the network. I guess getting back to your question, what the use of that energy does is it because there's a real world cost for using in terms of power in order to mine the Bitcoin. And so what a network like Bitcoin does is it hunts out the cheapest power. And traditionally, it has, particularly in China, hunted out dirty power, like coal and whatnot. And I think that's part of the reason why China banned it, because it wasn't going to meet its environmental targets. Whatever. They also probably wanted to ban it because it was a means of getting out of their, system of control and surveillance.
Yep.
But the dirty power, the use of dirty power is bad for the environment, right? If you're firing up coal factories in order to, generate power, it's adverse for the environment. But in New Zealand, we have a lot of sustainable energy, a lot of clean, sustainable energy, hydropower, geothermic power, where you can create a lot of power that might not be getting used. So these, a lot of these power networks have what's called wastage power. And what you can do with Bitcoin is you could take that power which was otherwise being wasted and monetize it, right? So this is something which they're essentially trying to do in El Salvador and Tonga with the volcanic energy.
Yeah.
So I guess getting back to your question, there's a lot of FUD or fear, unknowing and doubt around adverse effects on the environment with Bitcoin. I guess what happens with regulation and game theory is that Bitcoin will hunt out, eventually regulation will require clean energy to be used, or there will be companies like Tesla who originally allocate to Bitcoin, but then they sort of wind back and say, oh no, we're not going to be selling Teslas for Bitcoin anymore until we're satisfied that Bitcoin's meeting this ESG
so market
narrative.
pressure.
Yeah. That creates demand for clean, renewable, sustainable power, which is actually a good thing for the globe, right? And away from dirty power.
So if I can give an analogy there, is Bitcoin bad for the environment? It's kind of like, is my commute to work bad for the environment? And it's almost like it depends. Am I taking a bicycle? Am I taking a motorbike? Am I taking a big diesel truck? Am I taking an electric car?
Totally.
In terms of the impact. And then over time, as the industry continues to mature, the answer is probably going to be, hey, it's bicycle or electric car.
Yeah. Yeah, and this is a really complex, tricky question because you're driving around an electric vehicle, but is that necessarily more environmentally friendly than?
Very good point.
Because there's been mining to get the nickel and all the other components for the batteries. There's battery wastage, whatever. But you're totally right. I guess if there's the incentive to use clean power, if there's maybe a tax credit for businesses that are investing in clean renewable energy and mining Bitcoin with that, then that's going to be adopted by Bitcoin miners, right? Because it makes their margin better.
Yeah. Awesome. This has been really good, James. So this is our introduction to crypto series all wrapped up. We ask every week, what questions do you have? What would you like us to tackle on the podcast next week? I think this is more appropriate than ever. We'll get James back on. Let us know what questions you want to ask next time. The obvious questions around NFTs to jump into next time. There's the security. There's so many. The future of cryptocurrencies. There's so much we can jump into in the future.
Very deep rabbit hole.
So please make sure to subscribe. Please make sure to give us a review, and we'll catch you next week.
Cheers.
Thanks for having me, guys.